Good morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, Piaget Week.
Really good. Honestly, I mean, it's one of my better weeks just because of a couple things. Number one, MSTR is just really responding well to the pivots and crypto. I think the expectation was crypto would just get obliterated with everything else, and it didn't. A lot of people were offsides on that and kind of did some funky things to the option premium. So um, just kind of lucked out there, but it's prepared trade things off some levels. Couple put hedges just went crazy, obviously. So even if you're wrong and you hedged it with options, you had a pretty good week. But yeah, I mean that was pretty crazy. Just good time to go small, be close to the vest. We've been saying that for weeks.
That's just a couple quick hitters. TMC and Dollar General Tire Company did good. Pretty much shut it off after the tariff talk. I knew that wasn't going to be
Yeah,
digested
yeah,
well. So golf towards the end of the week. Yeah, expecting an overreaction, a little bit more overreaction. Anyone that was long in anything, you had to either make some decisions or you felt a little pain last week. And I wasn't
yeah.
ready to sell a lot of things I was in, so felt a little pain there in the longs, but um, more than I expected, to be honest, with the
Yeah.
pullback. But you just look for opportunity going forward, and um, yeah, so kind of a mixed review for me for the week. The golf was good though, so I can't complain
But
that
yeah, it's,
I didn't overtrade in a shitty environment. That would have really sucked.
yeah. Yeah, a couple things. So first of all, I probably like a month ago by now. Said, you have to, with some of the things that we're way up on, you have to decide, what am I going to do if this drops 10% in a week or 15% in a week? And that was part of that was me talking to myself about stocks like Duolingo and Spotify and some of the ones we've Quillo, like some of the ones we've been through. And then this happened. It happened faster than I thought. But that's always a theme in here, right? It's like we see some things, and whether it's to the upside or pullback, it's like I see this flow. I had talked about FedEx 220 for June, so I'm thinking like probably May it'll get there. Well, it got there in like 2 days, and then some. So, but I think you have to prepare as if that's going to happen. And the other thing is we've been off of calling out specific SPY numbers for a while now, so that's not new. And in part it's just kind of the conditions that we're in. It's like I just don't see much upside, but it's not really that bearish. And we went through that for several months, and then the 3-2 market idea came into it. And if anything is going to shake us out of the 3-2 market, you need an event like this. You need a paradigm to change. So while I don't think that we're out of the woods or whatever, and honestly I don't really like the bullish framing of everything online. Oh, we're all suffering together, and um, all the that whole community idea of that. I don't really care for that. But anyway, the idea that I think there is going to be more overreactions. There's going to be more news drops. You're moving from the whole concept, individual countries, and all of that. But you'll see the beginnings of getting out of this, and that's what I look for in option reads every time we've had anything like this. And the market will come out of it. Particular sectors sold way off that aren't even affected by tariffs. Um, will have optimism about, well, the Fed's going to have to do something, like all that will start to move things. But in terms of getting out of what we were in, that 3-2 market idea. This is what you needed, something like this. So I'm kind of glad to see it from that perspective.
Yeah, it's all for me. Well, I mean, you can't stop it when it's happening. You can you know batten down the hatches, so to speak, with what you got. But it's
Yeah.
it's it's understanding the environment going forward as quickly as possible, for me. And um, is this another Trump problem, that our idea that the market pouts about and everyone changes course in the next 2 weeks, or just something we deal with for the next quarter or two? That's look getting there first is always best for me. And it in general, um, it feels like an overreaction. So you just go from there. And even if it's the other way and you're going to be stuck here for a while, and we're just going to be pulling back. There's still ways to invest in trade in that. You just look for stuff going against the grain, or stuff that's not affected by the news, which I'm sure we're going to get into at some point. But yeah, you just kind of, you know you don't pout when the market pouts, and you just have your best foresight you can in these situations, and you usually can do really well if you don't just get caught up in, lack of better terms, on a minute chart, following
Yeah.
something down. Because yeah, I mean, there's always going to be there's always something to trade. And in the event, there's always something that's it's good for, or it's bad for, and there's always an overreaction, someone that took too big a haircut. So I think we're just in the early stages of that. Um, I thought the pullback to the 50 was needed, um, and I said that since November. I think that what we got Thursday, Friday, or after the tariff stuff announced, is definitely a pretty large haircut for what the news actually is. So looking for some clarity going forward. Again, I don't think you're going to have that from your side until midweek, like usual. Um, but you just got to kind of prepare, be ready, and pivot a little bit from what you're trading. And a lot of stuff, to be honest, that we couldn't trade, or that I would say not to trade, is probably going to become tradable. So I'm looking forward
Well,
to
I
that,
mean,
because there's some good stuff out there that we just have been in no man's land on. So getting an overreaction, or getting a deep getting a direction in one way, usually makes something tradable again. So I'm kind of looking forward to where we go from here. Even with like the news this morning that Taiwan wants to, go back to just, hey, we won't charge tariffs, you don't charge tariffs, and then knowing that's good for like Nike, Samsung, HP, Adidas,
yeah.
even stuff like that, and probably some agricultural products as well. I think that becomes the skill, or what makes traders, separates the men's from the boys. Besides people just like, oh look, stocks go down. You got to be a little bit more involved than that, and we're pretty good at that. So I'm kind of hopeful, and again, I like to trade upside only. So I say it all the time. You got to be a fan of stuff going down when you're not in it. Well, a lot of these stocks that dropped big, I'm not in, so I'm a fan of that.
Mid candle recovery is going to look pretty good on a lot of major companies that are healthy, have a lot of cash, and fine. So yeah, I mean there will be some definite bounces, and with the tariffs, I mean the binary thinking people have that, well, okay, this is going to force companies to make things in America. Um, Probably not. I mean, in some cases, sure, if it's feasible, but there's a couple things. Number one, company can just get a siege mentality and say, well, we'll wait for Trump to be done. We'll wait for the tariff to blow over, or the next president, or whatever. Or we'll move things around in Southeast Asia to a more favorable country than whatever they're doing stuff in. That's a hell of a lot cheaper than going bringing things to America. So there's a it's going to be a lot more complicated than people are assuming. I don't even try to completely understand everything that's going on with tariffs, but you get a sense of it, and then all my stuff's flow driven. The flow starts to make sense when I see that. And I I mean shoes are a perfect example that is a very fragmented sector. Croc and Crocs and Deck, they're going to give me a different read, hell of a different read than Nike will, or Foot Locker as a consequence of Nike. And so yeah, I'll be diving into that. It's one of the reasons I talked about bringing a version of sector notes back on a more regular daily basis. Just flow check-ins. I think we kind of need that, especially if you're to get into options or you trade options. So yeah, I mean, I'm looking for a lot of little individual reactions. Some comments we've had recently worked out. If you got into soda, did okay. You got into beer, you did okay. I mean, even stuff that flat or up 1% or whatever, feels pretty good when Apple nukes 9% in a day, just being something that's green. So I think we'll just continue the work there.
Yeah, I mean, like fragment is probably the best word, and like there's gonna be like shoes. I guess is a good example. You just go there, like Crocs. If China and Mexico or whatever are getting just hammered, and Vietnam figures it out, they could just manufacture more in Vietnam.
Yeah,
I mean, they're already set up that way, or they could also like just tell the people in Bosnia you're taking a 50% pay cut and just make them there. So no, I'm with you on that working out. It's just kind of going through each individual name and seeing which one didn't deserve the overall haircut. And
yeah,
you're also getting that in like the airlines as well. Like that they're not really affected much by tariffs. Um, Most of them buy planes from Boeing, and they're located here, and um, so there's a lot of stuff that I think took a big haircut that we'll get some clarity on. Be a little more than mid candle. Mid candle's a great trade, um, but catching one of these that just took a haircut for no reason that was already in an uptrend is uh, more than a good trade. It's a good opportunity. So that's what I'm looking forward to getting to. Again, there's a lot of stuff that it just wasn't tradable for me. That's going to be tradable going forward. And yeah, we usually find the weird stuff or the sector relief early. So yeah, just stay in the game, keep doing the work, and these events happen. We had the crescendo a year and a half,
mm,
2 years ago, I forget, but same thing for me. Like we woke up that one morning and everything was down, and you have to just look at it as this is an opportunity to get to work and separate the men from the boys, so to speak, and um, keep trading for
and that
me.
was my biggest point in MSTR longs of that whole cycle was that day. Um, so yeah, definitely always looking for that. And I think I mean, what I see people online, the same old, they, buy the dip. And you have options traders talking like investors. And it's like, you're not investing. It's not, it's, let's use that term portfolio loosely, because you're just basically just piling into random stuff that's down, and it's not going to work. You're just going to get a lot of small account challenge resets going on.
Back to Bitcoin, it's
Yeah,
stable.
you get like, I mean, people trying to read, they get into futures at these moments too, and they're like, oh well, if we hold 5,000 whatever, we'll run it back turbo tomorrow. And it's like, I don't think so. And then it drops another 4 or 5% the next day. So it's not how it works right now. The To act like it's that tightly controlled during these events. It isn't. I mean, whales are reassessing and repositioning and chasing, and opening new stuff and filling out. I mean, it's chaos, and I can see it in the flow. I just can look at a picture of flow, just see that it's not an orderly sell off that's happening. So you cannot read things with your indicators, your normal indicators during events like that.
Yeah, the whales or the big fish or they, whatever tangible you want to put on them, they don't like to lose money, and they own most of this shit, so it'll work itself out. I'm always a firm believer in that. Like they retail just didn't get bagged. I mean, you watch the news and that's the first thing they say. Oh, here's all people's retirement. Well, if you're retiring like if you're 61 and a half and you're retiring in next year, yeah, this might mess with you just a little bit. It might throw a little. But if you're my age and you're investing, like this is just it's another opportunity. It really is. And if
Yeah.
you're in your 20s, it's really an opportunity. And Twitter traders, I mean, the starting over day every day always hits home. But um, what really gets me is, I mean, they have to. It's almost that have to trade every day, and
Yeah.
when you get that thought in your head, then it's obvious they're just there to create content, and Um, I wouldn't put too much of my overall theses into people that are just creating content. That Charlie guy is probably the one of the best ones of them for an example. But I mean, if you watch his little YouTube videos, it's always something, some big events happening every single day, and it's just
Yeah.
that's not the case. Like I don't know. I just want to tell people to get out there and touch some grass, live your life. I mean, if you're trading and you're doing all right, like enjoy it a little bit. And the best time to enjoy it a little bit is in these situations until the market kind of levels itself out. So, I mean, that's just personally what I do. Um,
Yeah.
um, and then obviously just stay in your process. Don't let these kind of moments change your process, and you should be fine. And we've been through, I mean, not only downside but market changes in a long time, and there's more fake outs in a bull or bearish market than there is trend changes. So I usually give it some time. I mean, with you ask people right now, is this market still bullish? And 90% of them are going to say no, and I'm not ready to say no yet.
Well,
I'm just
I
not.
I talked about this. The big framing of this is that Mag Seven has entered a bear market, and there's just some big problems with fragmenting it in that way. The Mag Sevens where all the gains were, right? So for it to, yes, it's going to pull back harder, and then market makers are probably going to seek out some equilibrium, for all of this. But yeah, the moments of, I mean, actually, I remember this on the other side when they that premature announcement of a bull market, and then stuff took a significant pullback from that, and then it went one more time. In fact, it was I think I can show you even on QQQ where I was talking about this this thing. Um, yeah, there it is. All right, so the that's where this line came from was sort of premature for a bull market. And then and then it dipped back, and then 304 came back again. So that you know reporting, and I talk about this all the time. It's like people who want to be reporters, they're all after the fact. The market has already digested a lot of that by the time it hits CNBC and commentary and all that, and you're going back and like reading history sometimes, and even for things that happen quickly, you want to say the Mag Seven is in a bear market. Well, what does that mean? Does that mean the sell off just started? You're telling me that you know you want to start going short, now, or just the sky is falling. After all that selling we just had, you're gonna say, oh, here we're at this moment. Now we're in a bear market. It just doesn't really work like that typically. So yeah, I'm not really. I don't put much into that, and I do think you know finding equilibrium, house breaking even, with the market makers is more likely, and that's going to involve a little bit of a bounce. And my take on the bull and bear market thing, I said, like, I think we're still in a bull market. I think rallies will behave like bear market rallies for a bit. So as a trader, that's good. As an investor, it, it's going to, whip you around. Probably don't want to check your portfolio every day.
Yeah, it's larger time frames always tell the story for me.
Yeah.
I mean, a lot. We're still at a higher low on a lot of charts.
Mm.
In the grand scheme of things, you kind of see it here too. But you might have made the last low, but just understanding that equilibrium and then using it to your advantage. Um, as places to watch prices or start getting interested in tickers. I mean, that's that's where the head should be, not just this is pulled back so much, because you will, like you said, just be late um, in anything, and it's just the natural cycle. Like it's not going to go up forever. I mean, if you pull up any chart, it usually pulls back once or twice, over the course of a year or two, just naturally. Even in a good market, you have some pullbacks. So when they're news driven, I think they're not easier to trade, but you have a reason and you have something to understand. It's like getting a stain on your shirt. Like if it's ketchup, you know how to get it out. If it's blood, you know how to get it out. If it's a little bit of dirt, you know how to get it out. And that's all the news is we know what the stain is on the market right now. I mean, nothing like just get if we got that pullback on no news, like you're just kind of wondering what's going on, and you kind of understand the news, and you start again separating the winners from the losers, the men from the boys. Like there's gonna be, and I know we're gonna get into that thesis probably in the next session, but there's definitely some people that are taking haircuts here that are unaffected by the news. So it's for me, the having a couple of the puzzle pieces makes it easier to trade, and um, and just through the cycles, you know what too much is. You know what too much pullback is, and um,
Yeah.
at 4 or 5 years in the game, you definitely will see it a little different. Um, and if you grow up every time, it's like a scary movie. If every time they do the ring in the scary movie, if you jump and you're like that's what you're gonna do. You're gonna panic every time. So being ready for the bad moments, I think, is what really makes traders and seeing these as opportunities instead of wondering why the sky is falling I mean is what's gonna make you. So I would right now be start. I mean, I said last few weeks, like, I understand we're in a sideways market. If you don't want to trade it, you still got to do the work, and it's time to focus now. I mean, this
Yeah.
is when you're gonna make the for me gonna make the good money. I mean, they're gonna get the easy trades out of these events. So I
Yeah, that's why that's where my comment came from about going back to notes every day. Um, in the sideways market, there just isn't really that. Was different kinds of trades. There wasn't really a point to, "Oh, here's what Apple's looking like today," and it's just incremental. Um, you can get a bigger picture idea of what Apple's going to do or whoever in you get a sell off like this. So I'm excited about it. I like to work. I started doing this in some pretty shitty conditions, so I'm comfortable with it. And I have you know plans already for long term stuff, and as things hit stops, I'm fine to get out and just whole. So the mentality of cash is a position. That's all. That's fine. It's kind of a cliche. Um, for me, it wasn't like, oh, the market's looking like shit. I'm going to sell everything. There's planned selling happening. This hits this number, I'm out. This hits this number, I'm out. And so as those sales hit, build up some cash, reassess, figure out where you want to put it. And that's to me the rotation you see with some of these guys. Like I got bagged on CLSK, so right now it's hymns and AMD. That's what I'm into now, and they're just and then they bought the top, the top on those two. Now it's right back to the same old cycle of what those guys go through. So,
yeah
but yeah,
going
I think we got a better way. A better way
going
here.
through stuff this weekend. I'm definitely in my head of all right, we're not catching any knives. That was the first thing. Like no knives. I don't care where it is. Try to find some stuff that's stability and on a level. And thinking I'm going to be really picky, and I end up with the last five stuff and probably 12 or 10 or 12 or 13, whatever on the list, and I have like another 25 that I got in my side notes for, check back midweek. And stuff like, just to give an example, stuff like, all right, well, Redfin, we've been on that thesis for a while, a lot going on there. Definitely still a good time to keep an eye on that. But then Zillow, you get an opportunity to trade Zillow again. That's going to come back around as well
Yeah,
because it
yeah.
created some range. So for me, it's again getting back in the trenches a little bit and really doing the work in this opportunity as opposed to just sitting on your hands or or just walking away. I mean, I'd rather you walk away in the sideways market or stop trading in the sideways market when there's not a lot of range. When we
Mm.
weren't getting a 20 percenter every day, but when you start getting 20 percenters the other way, that's when you start working on which one of these is an overreaction or which sector shouldn't be affected like this. And I I was surprised on how many things were in a tradable area already. So I don't think this is a long event personally. I mean, I don't want to get in front of the skis at all here, but um, there's going to be a lot of stuff that just is going to be revisited that I would hate for people to miss on because they're stuck on a SPY chart or stuck on a QQQ chart or are worried about only Bitcoin because they look safer or they're what people are used to. Um, yeah, or
Oh,
CLSK because that's what they've been bagged in the whole time.
right. Yeah, exactly. Yeah. Um, yeah, and I mean, we're still, yeah, getting a little closer to maybe liking CLSK again, but I think it needs one more big flush on that one. All right, so just give this a good transition to some boring things
Let's
and
do that.
aluminum. I don't usually pull up the aluminum chart. I usually stick with copper, but I just kind of wanted to show you this. I mean, you look at the aluminum on the day chart and just collapse here, and RSI just absolutely in the dirt, 1336. Um, no, I mean it's just not. So that's not gonna last. There's ways in which if you work in steel and aluminum and copper, like the industry, um, job security could be a little dicey. But as a sector, when this all shakes out, a lot of these names are not just going to recover. They're probably going to benefit from um, what's going on with this new paradigm in trading. So I think there's some names there I would be looking at that you maybe didn't expect to get a good entry again anytime soon. So anything aluminum, copper, steel, um, all that stuff. Like yeah, I mean, copper dropped almost 9% in a day.
It's ridiculous.
Yeah, I mean that's absurd. Still well above my line at $4, which started this whole move. But equilibrium here, you get back to like 475, something like that, and regroup. So I really like that. Give yourself time. I don't do short duration options on any of that stuff, but we'll be looking to scale in on some the metals that in that
I
regard.
just overall not really on the two, but the two charts make a lot of sense. I would rather, I mean, personally, I've been through this a few times. I'd rather have a move that happens in 4 days than 4 months. Um, I'm just that slow bleed out is probably the worst for how I trade. So and that might just be for me. I don't know how you feel about that, but just a complete sell off for me is usually the best way to go. And I would rather it sell off quick and then grind up that whole elevator down, staircase up. That just works a
Yeah.
lot better for me. So those two charts, I don't check those on the weekly basis. Shit, I barely look at SPY. We know that. But looking at the pullback in those, I see more of an overreaction, and it looks like they already sucked up a lot of that. If I'm reading your wicks right on those candles.
Look at I mean look at how quickly if we just go back to like 2022, um, you get accelerated selling in these. So that's I mean we might not be done with the selling in copper, but it gets some stability, and then and then moves up. And so the yeah, I mean, just a huge opportunity here for like pound for pound. It's probably one of my better sectors. Crypto reads have been really good, but if you're just talking about like sustained swing trading, like um, copper and steel, if you go all the way back to X, even before merger idea came about, like um, I've done really well there. So when I talk about getting into some deep dives on notes, I mean this is kind of the sector I have in mind, even more so than big tech. So yeah, really excited here. Easily test this $4 area. Could flush below it, whatever. But it's definitely you're going to see some new flow setups. So I'm excited about that.
Yeah, and on the X, I mean, if you zoom out even on a day chart on X, we're still high or low from here. Like so people
Yeah.
panicking on like the sky is falling, like that's
Oh yeah, I mean
again,
look at my pivots. Look at my pivots on X. Like
yeah, they're
we're
not coming. That's why I brought it up. I
yeah,
was like,
yeah, yeah,
I
yeah,
know the 20 lines are still there, but like
yeah,
you're getting 35s offered to you here, and yeah,
yeah.
we all believe it's a $50 stock. You just kind of look for those opportunities. I don't know how else to put it, and but if you pull a 5 minute chart up on that, it's gonna look like the sky is falling again. So big picture, especially on the staples for you.
Um, silver, same deal. I mean, so to me with silver, what you had happen is this fluctuation. You're getting this. I mean, we talked about that. The 26. It's probably 28 now. But kind of just moved through this zone. You just had to move down through the zone very quickly. But setup is still intact to me. And so I'm just going to be looking at those charts, looking at the flow there, uh, and big picture could be a blip. So it's certainly not a trend change to me at this point. I
Yeah, I
don't
was
think you can
surprised how
make.
miners took it off the chin a little bit.
Yeah,
Um,
yeah,
yeah, I'm not buying it, especially if they're the combo miners. Um,
yeah. Right.
I'm just not buying it.
Um.
I think there's big opportunity there, and I'm not going to get the names in this session, but because nobody knows them, but um,
Yeah. Yeah.
yeah, the 26 has always been it for me here. That's a great pivot. I know you don't have it on your chart, but again,
Yeah.
the trend really hasn't changed, and even since we have broke 26, this has probably happened 3 or 4 times, and you just keep getting a higher low from there. So healthy. That's a healthier one than most charts.
Uh. Yeah. Absolutely. And then oil got smacked around. You had Devon dropped 11%. I hit my stop on Devon a while ago from the uh, couple early buys, but yeah, this. I mean, we'll see. I don't know. If you break below 60, and to me, oil, it just if it wants to consolidate below here, that's fine. And we'll see. So a lot of fresh reads and oil coming up to me. So I'll just be kind of looking at that. Did well in the sector so far this year. It before all this was the year to date the best sector. So we'll kind of see what shakes out there as well.
Yeah, I've said for months that they like stability, and that move is obviously not a stable move. So the charts will
Yeah,
overreact, and I think most of those grind back up here.
yeah,
Probably starting sooner than most, and that doesn't really have to do with anything with the price of oil. It's just it's a too big to fail sector. It really is. They figure it out, and um, again, if they get some stability in price, they'll do just fine. And I don't think we're at an all time low or anything on oil prices. Like that 62 to 72 is probably the wheelhouse it needs to be in. So they'll figure it out. Market will tax them short term. What's the saying that the market is a voting booth short term and a scale long term? Um,
Yeah,
you know,
yeah.
people people are just voting bad on it right now, but I think you can't really tip the scale against oil. They're just too
Uh,
big to fail.
I'll, I'll say this: there aren't a lot of charts out there with negative numbers, and
Yeah,
I had a lot of friends in oil when oil went negative for a minute. So like that was you want to talk about lack of stability.
yeah.
That was it. So and then it moved back up, found equilibrium, and then took off.
It's
And
like the
a lot of this was
only chart you want to be sideways.
yeah, right, exactly. Yeah. And uranium still just sort of hanging around. Don't really isn't really that affected by this. The I don't have charts up for palladium and all these obscure ones, but the rare earth metals with regard to tariffs and you know, China playing hardball and all. I mean, that's gonna be a story, and we know some names there. Other names I'm not going to bother talking about in here because nobody knows them. But yeah, there'll be some good opportunities in that stuff too. I think.
Uranium is the weed of the minerals or the commodity sector. I don't know how you want
Yeah.
to call it. It just is. Like, it expected the government, the Republicans to come here and start rebuilding reactors, and they just ain't even talking about it. So, um,
Right. Right.
the lack of news is not favorable for them. I don't think they really. They're going to move to their own. Um, they're going to move to their own tune, so to speak. And they're not going to go all rough. They just need news for the sector, and I think they'll be fine. And we
Yeah.
were expecting, it to become clean energy, and that just hasn't panned out. This administration kind of dropped the ball on energy, to be honest, so far as rubber hitting the road. You can say energy independence all you want, but until you do something, it's really hard to get bullish on those kind of tickers and trades.
Yeah. No. Yeah. With you there. Um. All right. Yeah. So that's
Do gold.
Oh yeah.
I'm interested in your I'm just interested in your take on it because it didn't really pull back as much as the others,
Hmm.
um, where people would panic, and you still have a pretty big thesis for it. So, just curious on what you're.
Oh yeah. I think you'll see pretty big downside wicks. Just a lot of resistance to the heavier sell-offs, and um, I expect 3,000 to stay relevant. Is basically my take here. So even if we pull back below that, I don't think it's gonna last too long. Trend's too strong. It's gold is just the uh, kind of the safe haven for perception of chaos and all that. So yeah, I'm pretty solid on gold, and that'll help. Pullbacks will be heavier in silver and then recover as well. But yeah, I expect the trend to continue with gold.
Yeah, so the asset adjacent ones are okay. It's the ones that are actually used in products that probably get a deeper pullback in with the uncertainty. Perfect.
And talk Bitcoin for a minute.
Words.
Uh, yes. All right. I mean, it's not doing much. I think what you want if you want to get into Bitcoin is you want to have a disaster overnight kind of thing, flush under 80, 78, 76, something like that, and then it'll bounce quickly and probably see some continuation. So still looking for that. I don't really think it gets back to 50s, 60s, anything like that. I think we make a higher low somewhere around here, low 80. So I'm just looking for a few bad days, and just mainly for now, just trading games I know off pivots, but not quite building any swings just yet and any of that stuff.
Yeah, Bitcoin's pretty easy for me. I mean, just from what it does and what it's done historically. But we picked that 88 to 72 range when it was 100K.
Yeah.
looking for that rejection, and we're in that range. It's tightening up, and those two things, holding a range and getting tight, usually lead to large moves in Bitcoin. Um, the longer you hold a level, the better the move usually is. So,
Mm.
um, yeah, I like the sell off in the charts and the consolidation in the commodity. It's just timing that um, is difficult on my end, but we follow the flow there and usually do okay. So
Yeah, no,
I
it's
did not like Bitcoin what in March,
right.
February, January. Like I was trying to get to refuse to talk about it, and now I think we do have a reason to start talking about it again.
The timing's tough, and it's I I put up some pretty pricey hedges while I'm trading it, and then you see why. So your MSTR dropping 10% in a day, not really a big deal. It does that all the time, but you don't want to get caught long only with options when that occurs. So if you got three calls and one put, on a drop like that, you actually end up green even though you had three calls. So that's why I do it. But um, yeah, the it hasn't reached that point of load some shares here, but yeah, coin off 165 or even just to get back to 165, even that relevant. There's a lot of trades there. So while it sets up for something longer, there's a lot of quick hitters in crypto, which is why I keep posting it to my notes.
Yeah, yeah. It's just when the better tickers need um, the commodity to have the big move as well. Playing
Yeah.
backside on the two you talk about is totally possible, and a lot of people can do it. But um, getting that upward momentum into the full sector lift is always what I look forward to because there's some really easy names at good price points um, to get your
Oh yeah. I mean,
more,
you're gonna
more than a
catch some
cup fill.
30% moves in 2 days kind of deals.
Yeah,
I think that'll be
exactly,
back. Yeah. Yeah.
exactly. And there's always
All right.
someone to
Well,
buy your stuff at the top. So, I mean, that's another.
oh yeah,
Let's just
yeah.
bring
That's
that
when
out. That's
the
why I really like
yeah.
that sector because you,
when you
I
when you
mean,
start when you start seeing accounts dedicated to one of those tickers, you'd sell into that for sure. Yeah.
mm-hmm.
That's what I got. So I don't know if we want to go to Spy for a minute
Yeah, we
or
talk a little bit. I mean, what are you seeing over there? It'd be nice to know. I mean, I've done this long enough with you. I know they're probably still shuffling the deck over there, so like I don't pay too much attention to it until you come out with
yeah.
that super focused read. And when it comes to Spy, you usually have like the roadmap laid out really well in Spy. So until I see that form, like I mean, I guess we're there now. If you're not talking August September contracts, with some leaps to back it up, it's all just short term noise. I mean, I don't even follow flow, and I figured that out. So um,
Well, yeah. So the Spy for I mean like a year now. The highest open interest contracts have been puts. So there's a lot of maneuvering and hedging involved in that. And if you want to look up, I mean, you can go back weeks ago, September 535. I've talked about this contract for a long time, and it was sort of you know, it was like something that was multi-leg with other things and all that. It was $4,800 now, and 100,000 open interest, and they're still holding it. The activity you do see is selling to close. So a lot of them are gonna just go ahead and hold this one. I mean, it's $30 in the money at this point. So they haven't really opened up a lot of other new stuff. You do have this May 530, um, and all that. 540 April, like all that kind of stuff. So obviously, like these are the hedges just paid off for them, balanced out losses elsewhere, that kind of thing. So it's a little early for a read, but the 530 area is what you want to keep an eye on with Spy, and in a recovery, 530 to 550 is where I think um, we land if you get a rally. So that's the only read I have now, but not a lot fresh. I mean, they just they're sitting on a big pile of money from these hedges, so we got to wait and see what they want to do with them. Like,
Yeah, I mean, for me, not necessarily in no man's land, but um, 500 psych, big candle down. I mean, we're almost to the bottom of the 1 year share structure where we've been traded at. That was 492 is your bottom, just for the 1 year volume profile, and that'll be telling if we do get reach that this week, which I don't think we will. Um, it feel on this chart in itself. I mean, we expected the Mag 7 to pull back. It feels like we were gonna get a flush. This candle feels like a bit much. So just making up Friday. I mean, we could legit be stuck in Friday's range all of next week, and I wouldn't be surprised when it comes to SPY.
yeah,
Which, I mean, that's five. Let's get some numbers here. 505 to like 545. 537. I mean, we could totally just be there. It's still a $32 range on SPY, and it wouldn't surprise me. And I wouldn't call that strength or weakness either. I just understand market mechanics. And
no, it's yeah, it's just fishing out liquidity at
yeah,
that point. So so yeah, I mean this. So basically, like the contracts I talked about for months, and you just saw, those just skyrocket and go from a few $100 to 4 grand. Now that's trying to balance out. These companies own a bit of Apple and Microsoft and Nvidia and et cetera. So that's the point of having these contracts for them, was to balance that out. But yeah, in terms of what they do with them, where they roll, fresh stuff opening up, still just kind of wait and see on that. And then you had some anomalies too, where I mean there wasn't anything for April 11th in the highest open interest, and these went from nothing to 100,000 contracts. So we'll see what kind of happens with some of these puts. 455, a little absurd. I don't really think that's going to happen this week. But anyway, yeah. So those popped up, and that's flow that you just kind of ignore. It's not really that relevant, but it's May, it's September. Those are the if anything, that's what I get out of this. Those two dates matter a lot. And I said weeks ago, I was like, time to look at May, and so here we are. So now we're just going to see how they want to do the May September boxing glove. If you're in the room, you know what that means. That's one of the things I'll be looking for.
yeah, and then just from a shorter term standpoint, I mean, you got if you're not asking yourself, so I'll just ask it for everybody right now. Like, do I think and should SPY open below 500? With the little future open we get and the pre-market move we get
Yeah.
tomorrow, should that be below 500? And how do I react? And what am I looking for if that is the case? And I think that's kind of the where your head needs to be shorter term. And I don't think anything below the psych right now lasts long at all. I think you do get recovery off of it. It's do we stay in that 530 on the top range, or are we consolidating again? I mean, that's kind of what I'm looking for this week. And consolidation's great for me. I'm not that I use SPY to trade or anything, but if SPY is going to consolidate, a lot of the smaller names or the 5 out of the 6 on the street or the names that nobody knows, they're going to recover well in that consolidation because they took a bit more off the chin than they should have. So again, just kind of having that knowing when this happens where to look and where to trade is what always has been beneficial for me. So I have a plan with SPY even though I don't trade it, and that's the light version of it, and what I'm looking for going into the week. But and I also think that consolidation's better than just retracing that whole goddamn candle in 1 week. It really is, because
Yes.
mainly
Yeah.
because I need time. It's hard to catch a moving train. If you can give me a week or two here, it's easier to get positioned again in some. And I know you don't like them right now, but in some medium term swings, I think it's easier for me in that environment. So, um,
Oh well, hey, I'm talking options when I say that.
oh, okay, okay.
Yeah, when I say medium term swings are dead, I'm talking about the option people
Oh yeah,
that
yeah. Well, you
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 know
have
they're
the time attrition over there kills you, which you don't get that on share side. So that completely makes
yeah,
sense. If you're
yeah.
consolidating, why would you want to swing anything?
Yeah. Um, good stuff. Yeah,
Perfect,
we got a pretty full session next, so we'll go ahead and
perfect,
get on over there.
awesome. Like and subscribe. Link somewhere, people.